So today, when we started off today, we said due to the public holiday and the reports due out at 4, we'll tread carefully when we assess the markets. So when we met at, let me get rid of this. When we met this morning, we saw that the market was going sideways this morning at 6:45 when we met. So at that point in time, that was the lowest point of the market going from Friday. This is a 2-day 5-minute chart. So Friday, that was the low of Friday. So the low there was 13,314. And the high from Friday was 13,457. So that was the high and low from Friday. And at 6:40 this morning, the market broke that low and then formed a new low. So the new low was 13,293. And then it broke that again, formed a new low again. And the low there was 13,279. And you can see it broke that low again, went down and formed a new low of 13,244. So at that point, it was downtrending at that point because it was making lower lows and lower highs. So you can see that was a low, that was a high, made a new low, lower low, a high, lower than the previous high, made another low, and then a high. So at that point, the market was downtrending. So obviously, now that the market is downtrending, it's no longer going sideways. So we can ignore that previous high because the market is now trending. It was making lower lows and lower highs. So the market was downtrending. And if you want to also put the trend lines, you can use trend lines. But anyway, from a basics trading point of view, always remember that. So the market making lower lows and lower highs. So it was downtrending at that point in time. But you can see here, then made a high, made a low here, but that low was higher than the previous low. So it's no longer downtrending at that point because it didn't make a new low. So it made a low there, then it went up, made a new high. That high was higher than the previous high. So come back down, made a new low. That low was higher than the previous low. So it's now making higher highs and higher lows. And you can see it's gone straight up and made a new high. So at this point, this is now the new high at 13,320. Sorry, 13,330. So the new high is at 13,330. That's the new high. So the market looks like it's now uptrending. It's making higher highs and higher lows, and it's also broken the moving average 50. And that's actually where I bought, because I tend to use the moving average 50 also as an indicator to trade. So when the market started trending, I was saying if the market is going to keep going down, it should just keep making lower lows and lower highs and keep falling, and it shouldn't come back up and break the moving average 50. So when it did, I bought at the moving average 50 at that point. So you can see where it broke the moving average 50, I bought there. Obviously, the market has moved 30 points, so I've moved my stop to the opening level. And with this trade, my entry point is going to be the moving average 50, and my exit point too, I'll use the moving average 50. But you can see that the market can be quite dynamic. Things change from time to time. And that's the beauty of trading too. It's a live market. what you see in the morning can completely change in the afternoon. The whole dynamics can change, your whole parameters change. So this morning it was downtrending, now it's uptrending, it's now broken the moving average 50. But again, the same rule still applies. The fact that it's a public holiday and the report coming out at 4, you still have to trade very carefully. I'm just going to highlight something I was talking to you about regarding resistance. This is the Aussie US dollar. This is just for illustration purposes. Like I said, we're still going to focus on the Euro US dollar for our trading for 2 weeks. But this is what I meant about the market forming a resistance. So you can see let me delete my order. No, not delete it, disconnect it. So you can see here where again, this is Friday, the market was going sideways. That was the high of the sideways trend there, 9917. 9917. So that was the high from midnight last night. And you can see it was been going sideways. So the plan was to wait and see what happens. And you can see here at 950, the high there was 9916.6, so more or less the same as that. So it got to that point, and you can see there was a small pullback. And when the market pulled back there, that then formed a resistance in the market. So that's been tested once, and it held, and then it pulled back. So at that point, you could then buy just above the resistance, which is exactly what I did. So just again showing you how the resistance works. So again, formed a high, kept an eye on it. The market went up, tested it there, pulled back, and once it did that, a resistance had formed there, so I was then happy to buy if the market continued going up. Again, don't forget, all these strategies, they don't work all the time. It's not a guarantee that they're going to work all the time. I just have to highlight that. But it's just a question of you knowing when to use the strategies, when not to use them, and being confident with your strategy, knowing that they're not going to work all the time, but it's your consistency that would pay off. So that's just highlighting how the resistance works, knowing when the market forms a resistance. Okay, but you can see this is another good example. The market has made a high here, but it hasn't been tested yet, so you cannot call that a resistance. It hasn't been tested yet, so we'll see. Okay, any questions? I think there's a question here. So the question here, was your order already in place before the market broke the moving average 50, or you waited for the slight pullback on that candlestick before you placed your order? No, the question was, when I used the moving average 50, did I wait for the market to break the moving average 50, then pull back before I bought? No, I didn't. I just bought straight away there. As you can see, because all I've been doing was just moving my my buy order 2 points above the moving average 50. So my buy order just always been 2 points above the moving average 50 until the market took my order. So yeah, I did not wait for the pullback. Again, that's down to your strategy, because I know some people do that. They wait for the market to first break the moving average 50 pullback before they then buy just above the previous high. Why just buy once the market breaks the moving average 50? Also, funny enough, it's the same with using the resistance and support. Some people prefer, just in case there's a false breakout from the support and resistance levels, some people, they will wait for the resistance to be broken. Then once it's broken and then it pulls back, they will then buy from the previous high. So again, it just depends on what you're used to and what strategy you're used to. But the way I trade, I don't wait for that. Once the resistance forms, I put my order there. Or if I'm going to use the moving average 50, I will just be moving my order with the moving average 50 until my order gets taken. Can you look at pound dollar, please? Yes, we can look at pound dollar. Let's have a look at pound dollar. Oh, sorry. Hello, Prince. Your hand is up.
Hello,
Do you have
sir.
another question?
Yes, when you finish with the pound dollar question, I will.
No, go ahead.
The question I have, okay, the question I have is, now that the market is pulling back now,
Yes.
if it tests the point 133, I can't, 1330 now, if it gets, that point gets tested, if that point gets tested, there is likely to be a pullback, not so?
We don't know.
Yeah, if it gets tested, there's likely to be a pullback. We don't know. Then one may consider placing a buy order.
Oh, let me put it around the other way around. If it gets tested and it holds, yes, if it gets tested and it holds, then yes, it's a resistance, and you can then use it. You can then buy just above it. If it gets tested and it holds.
Okay. Then, okay. Is it because there is bank holiday, holiday in the US today, that the platform did not provide the
pivot point? Actually, I was going to ring them, but I actually forgot about that.